Alright fellas, so another stock video that I want to cover today. Um, so a bit about the background first. I still play Call of Duty every now and then. I play for like a quick session and I record as much as I can. I try not to recycle some of these videos, some of these videos because it gets boring. I do upload non-commentary videos of just me, I don't know, going around just murking people. Uh, but of course, I want to have these videos ready for when I commentate, right? I do plan to cover um, Battlefield videos again, or Battlefield 1. Just haven't had time to go around to it, but at least I still have some of these Nuketown clips. I don't know. You guys seem to like it, so I'll just keep going at it and see how far it goes, right? But anyways, so today's topic is QQQ. It's the ticket symbol for Investico's version of the Nasdaq 100 index. So, bit of background: I personally am not invested in QQQ, at least not yet. Because at the time I didn't know what it was when I first started investing back in 2020. Um, but it has been on my radar for some time. I've seen certain people cover QQQ, and it has gotten my interest, and I just thought to finally cover this since, of course, I'm trying to be a channel about gaming and finance. So kind of makes sense for me to cover this, right? But anyways, straight to the I guess topic. So should you invest in QQQ? I would say for myself, yes, if I want to enjoy long-term, I guess, time in the market as opposed to time in the market, as they say. QQQ is definitely a stock to hold for the long run. Uh, but anyways, QQQ is one of the most popular ETFs. It tracks the Nasdaq 100 index. So I am gonna cover what it is, the pros and cons of holding this ETF, the performance history, and how it has performed against the S&P 500. We do know there's something called the beta ratio that pretty much shows you how this particular index fund or stock or ETF has done against the S&P 500. Of course, we know the Standard & Poor 500 is the benchmark that things are typically against or compared against. So ultimately, I do wanna cover its performance history against it and who it's best for this ETF, right? So onto the first section. What is QQQ? It is an ETF by Investco. And like how I said, it tracks the Nasdaq 100 index. The Nasdaq 100 index includes 100 of the largest non-financial companies listed on the Nasdaq. However, it's heavily concentrated in technology and growth stocks like Apple, Microsoft, Amazon, Nvidia, etc. So, QQQ is a tech-focused ETF that gives exposure to the world's most innovative companies. And of course, that are non-financial companies, but mainly tech-focused. That's how I said it. So the benefits of QQQ is the next section. It's basically the diversification and tech and growth stocks. Instead of picking single stocks, you'll get exposure to giants like Apple, Microsoft, and Nvidia. Another point that goes in its favor is a strong long-term performance. Historically, it has outperformed the S&P 500 in the last 10 to 15 years, especially due to the tech growth that we have seen, and pretty much, and also the tech downfall, um, or pitfalls that we have seen in a couple years ago in Silicon Valley. But a little bit more on that later. Uh, QQQ is also one of the most traded ETFs in the US, so it's fairly easy to buy and sell at a given notice. The expense ratio for this stock is a bit less than, or around point with 0.2%. So it's great for exposure, it's efficient, and it has historically returned strong returns. So the next section is, of course, the drawbacks of owning QQQ. it's not truly diversified. That's one of the typical drawbacks of QQQ. It's heavily concentrated in tech. Around 50% of its weight is in tech. In other words, when tech struggles, QQQ takes a hit. The volatility of this, it can swing much harder than the S&P 500, especially in downturns. So of course, because the weight is at 50%, when things go south, then QQQ takes a heavy hit. Uh, there are no another drawback is that there are no financial, energy, or utility blend into this mix. Unlike the S&P 500, it lacks broader sector coverage, and it is important to make note because the S&P 500 is a lot more stable in terms of when the economy experiences a rough patch. Uh, S&P will see some of it, but if tech stocks are uh, are hit more in this recession, then QQQ just goes down. Right? There isn't no inherent stability of having uh, these extra exposure to other industries to keep the stock less volatile. Okay, so in other words, or in summary of this of all the cons in QQQ, expect bigger ups and downs. It's great to have during bull markets, but it's very painful to bear in bear markets. No pun intended. So the next section is QQQ versus other alternatives. We do have something called QQQM. So it's just an extra letter at the end of the ticket symbol. The same index has a lower expense ratio at 0.15%. It's designed for long-term investors. We also have the S&P 500 itself, whether it be VU or SPY. Of course, the alternative here is that you get broader diversification, steadier performance, and lower volatility. And these points touch on what I just mentioned earlier about having that stability when it comes to certain market turndowns, and it could be less painful to bear when you have such such exposure other than technology. Right. So QQQ is best for concentrated growth exposure in tech. Alternatives may be better for balance, right? So the next section I want to cover is historical performance. In the last 10 years, QQQ has outperformed the S&P 500 significantly, and of course this was driven by tech mega caps, right? I do want to mention that when the tech crashed, QQQ was hit harder than the S&P 500 back in year 2022. Year 2023 and 24, Nvidia and AI boomed, and this of course boosted returns again for the ETF. So as an example I want to share with you guys is if we had invested $10,000 in QQQ 10 years ago, right now it would be worth around 46 plus, and compare that to 33k in the S&P 500. So it's something to consider when investing in QQQ as opposed to S&P, and also of course risk tolerance. So in summary about the historical performance, it's fantastic long-term growth, but with sharper downturns when things go south. So I'm heading towards the end of this conversation. I do want to ask who should consider QQQ. It is ideal for long-term investors, bullish on the tech. So those who prefer tech and who want to gamble on the tech exposure market, especially right now with the Stargate AI data center that's being built in Abilene, Texas. If you guys want to continue to bet on that success, I'm sure that'll increase the evaluation or the target prices for the stock. In other words, if you just want to focus on tech, then QQQ is the exposure for or the ideal exposure that you want. I do also want to mention that it's probably for younger investors who can handle volatility, as opposed to older people who need that money for certain responsibilities that they already have. Of course, like how I mentioned earlier, those who want to ride the trends like AI, cloud computing, Stargate, that like how I mentioned earlier, and the EV sector. This is not ideal for investors close to retirement who need a certain level of stability. QQ wouldn't be for them. Uh, and of course, anybody who is a bit more on the uncomfortable side when we are experiencing big swings in the market. So in summary, this is best for growth-minded investors who can stomach volatility in the short run, who won't need that money in the short run, but the gains of it would be okay. Like how I mentioned earlier, say I had invested 10K 10 years ago, then now it would be worth 46K as opposed to 33K in the S&P 500. Okay. So in conclusion, QQQ is easy access to the most innovative companies, but it comes with the risk of volatility and concentration in tech and growth stocks. So if you believe in the future of technology and innovation, QQQ is one of the simplest ways to invest in that story. It has big potential rewards, but also comes with bigger risks. So if you are risk tolerant, then go ahead and try your hand at this ticket symbol. I think I would personally. I already own a few stocks that I have, I guess for lack of a better word, gambled on, and I have held it for the long term. And despite it being, up and down and not performing as well, just because I've held it, I guess for like 5 years now since I started investing, I want to say I've been enjoying what's the word, the growth, the profits, the green, I guess, instead of the red, because I've just held these certain stocks that go up and down, of course, in the short run, and still do. But I'm already still in the I'm heavily in the green to even uh, worry about, okay, if it goes low, I'm still winning. Right. So all of this to say, everybody, is to just please start investing as early as you can. I've started investing. I started my taxable brokerage account with $100 back in 2020 when COVID started hitting. I guess everybody. And right now, I do eventually want to share my portfolio with everybody here for those who are curious, who want to see some truth, or want to see, for those who are okay, I want to see it to believe it type of deal. All of that is a respectable mindset to have. I know I have one I know I have one too. But anyways, all this to say is, if you guys have the extra cash or two to spare, whether it be 150, 20, start now. Hold it. Don't sell. Buy S&P. Buy QQQ. Buy. Uh, I think for the most part that's fine for people who are just starting off. I tried my hand with single stocks, and I've held it and not experienced not experienced the benefits in the short run, obviously, but because I've been invested for a longer time, then I've seen the plus sides, right? But anyways, fellas, that's about it. If you do want to know or learn more about single stocks and other financial tools, I have covered credit cards. I have covered stocks like Coca-Cola, the S&P itself. I do have other plans to cover other financial topics like HSA accounts, high yield savings accounts too, for those who have a bit more cash, I guess, to play with. But anyways, that's pretty much all I want to talk about today. Alright then, fellas, later.